All right, we got the closing bell ringing in just under 4 minutes right now. Again, the markets are holding on to much of the green, not all of it, though. Keep in mind that at the highs, the Dow Jones Industrials was up 1,134 points. It's still up 659. S&P gaining 78, NASDAQ up 311. And then it's the Russell that has the biggest percentage gain here, up 2.5%. Transport's doing pretty well, up 1.5%. So listen, I'm just the messenger. The R word is starting to appear in some top Wall Street notes, with Goldman Sachs chief economist today hiking the U.S. recession probability in the next 12 months from 25% to now 30%. Adam Farstrup is head of Schroders, America's multi-asset team, $1 trillion in assets under management. Okay, yes or no, the R word is coming, recession?
The probabilities have certainly increased, but we think the economy is still in a place of resilience. So that's the R word that we're using.
Okay, R for resilience. So
Yep.
you don't really see a recessionary environment, even with oil this high. Even oil's coming down, of course, at the moment, but oil this high means inflation perhaps spikes. People stop spending.
Yep. So by day, we're looking at this, right? And the stagflationary risks, where growth is dropping, inflation is rising, are increasing right now. So we have to be concerned about that. But we still have the stimulus from the One Big Beautiful Bill Act coming through. Right. We have consumers who are still...
Isn't that inflationary, though, in a way, if people get more money back?
It is inflationary. So we have been in the camp that this recovery was going to be the economy running hot, right? And so you have to worry about inflation, but if we still have nominal growth going along with that, but what we see is GDP growth signals looking like they're starting to soften a little bit.
You're not the kind of guy, I would imagine, with $1 trillion in assets under management, where you're making trades like Boaz, who was just in this chair, day by day, minute by minute. But are there positions that you are shifting at the moment? And if so, what are they and where are you going?
Sure. So we've been rotating within equities away back from international equities into U.S. equities because we do think the U.S. is better insulated from this than Europe in the near term. We have taken profits on our energy positions because it is a bit of a binary trade right now, although there's a possibility that energy prices could move higher from here. The dollar, which had been weaker for the past sort of 9 to 12 months, in the short term looks favorable in our portfolio.
How short term? So you like the dollar, but how short term?
We see the dollar as what we think of as a tactical trade, because in the near term, the resilience of the U.S. economy will support the dollar, the flight to safety. Those longer-term inflation pressures are actually not so great for the dollar.
Gold has dropped like a stone. I mean, I'm looking at it right now, and to see a 4 handle, it's not so much that, it's that it's at 4,404 compared to the plus 5,000 that it was at.
Well, we had such a steep run-up in gold, right? So it's not surprising to see that fall back. We do think that this may be a buying opportunity because it is a strategically important diversifier. It's important not to think about it as a hedge that moves opposite from the market, but in a world where you are concerned about geopolitical uncertainty, gold is a great long-term trade.
And would you just buy the GLD? What's your advice?
Yeah, we would take that broad gold exposure, absolutely.
It's great to see you, Adam.